Good evening and welcome to this edition of Capital Market Live on Channels Television, where the markets speak and we analyze. I'm Will Ibong. Let's check in on equities performance for this week, and we begin with markets in Europe. As always, global equities, we see them closing in the green. We see the DAX in Germany, 24,635 points. That was up 1.76%. And we see the FTSE in London, 1.63% up at 10,471. And we see the CAC 40 in France, 1.83% at 8,350 points. Let's switch now to Asia markets and see how they performed also in the green, especially now that the US and Iran deal seems like it's going to happen. So we see them in the green, 2.81% for Nikkei, hitting 66,020 points. That's a record high. And we see Shanghai index up 1.12% at 4,031 points. And the Hang Seng in China is also up nearly 2% there, 24,718. Let's now see US markets, where we see the Dow Jones, S&P 500 and the Nasdaq all in the green on Friday, 0.7% up, 0.31%, and the S&P 500 also 0.5% up. And we know that SpaceX, that's Elon Musk's space company, that closed at $161 on the Nasdaq. It's at its IPO, jumping 19% after that record debut IPO. Now, Elon Musk has officially become the first person in history to cross the $1 trillion net worth in the world's richest ranking. A good one for Elon Musk there. But let's drive on now to our domestic equities and see the NASD, that's the unlisted market, which ended the week slightly higher, with the NSI, that's the index, was up 0.38% to 4,375 points. The market cap stood at 2.62 trillion naira. Trading activity was mixed, though. We saw volume rose 3.98% to about 5.03 million units, but value that declined sharply by 49.6% to 163.2 million naira. The number of deals there also declined. We saw that end this week at 136, 29.9% down. On the gainers chart, we saw Lighthouse Financial Services that led with a 9.57% rise, followed by CSCS, that's Central Securities Clearing System, and Campina Wamco. On the losers side, we have Introx Industrial Gases, UBA Property Company, and Double One PLC. They posted the steepest declines. We saw the industrial gases down 11.85% for the week, UBA Property down 10%, and Double One so 9.13% down. But in terms of activity, CSCS, Campina Wamco, and MRS Oil Nigeria, they dominated trading. Now let's move on to the NGX now. How did they close the holiday shortened week? It was higher, thankfully, with the all-share index. We saw that up 0.88%. 244,738 points there, and 156.97, that's the market cap. And we see the holiday shortened week, that was what we ended the market with. But trading activity, that was mixed. Volume rose. We see volume now. Volume and value, they were broadly positive. They were both in the green, 4.96 billion units and 207.5 billion naira, although deals that slipped a bit to 235,000 naira and 66. And our sector performance, that was also mixed for the NGX. We saw insurance leading gains up 1.63%. That was followed by banking and oil and gas, while industrial and consumer goods, they came under pressure. Now, on the movers chart, we see Associated Bus Company, Consolidated Hallmark Holdings, and Abbey Mortgage Bank. They posted strong gains. But on the laggard side, Fitson Healthcare, Nemeth Pharmaceuticals, and UH Real Estate Investment Trust saw the sharpest declines. Sterling Financial Holdings, we also have Access Holdings and FCMB Group. They dominated activity as most traded stocks. So overall, a positive week for the market, but still a selective one with gains mostly concentrated in parts of the financial space. Now let's look at one of the stories that came out on Thursday. The Central Bank of Nigeria is seeking to draw clearer lines between banks, fintechs, and other affiliated financial companies operating under the same group structure. Now, under proposed ring fencing rules, related entities would be required to operate more independently with stricter controls around customer data, funds, and transactions between affiliates. The regulator says the measures are designed to prevent risk in one entity from spreading across a financial group and threatening broader financial stability. What does this mean for the banking sector and the stocks you hold? Join me to unpack this. Dr. Sylvester Anaba, Head of Research at United Capital Securities, is here with us in the studio. Good evening, Doctor. It's good to have you join us.
Thank you for having me this evening.
Doctor, the CBN, we see them moving on two fronts here simultaneously. First, we see the ring fencing and then the full HoldCo framework revision. Is this routine housekeeping, or is the CBN reacting to a stress within the HoldCo structure that we have not seen yet?
A nice question. So what the CBN is doing at this point in time is they are trying to look at, stability in the system. It has gone far beyond having or raising capital, yes, to do the business, but now you have raised the capital. How stable are you? They want to strengthen governance. They want to strengthen self-sufficiency. They want to strengthen, transparency in the market. Yes.
So are you saying that the CBN is not responding to any particular incidents that may have occurred in the market under this HoldCo structure that is prompting it to revise the framework, especially looking at it was enacted in 2014? It's been a decade since they started operating under this HoldCo, this structure. Fintechs, we've seen expansions for this HoldCo, we've seen fintechs, insurance, some of them have Pan-African operations as well. But is it the fact that the 2014 Act or the law we've been operating, was it on borrowed time, and this is just maybe we need to change it, or something has happened to trigger this particular action from the CBN?
Okay, nothing has happened so far. What the CBN is doing now is trying to be proactive, and this is not new in the global world. In 2008, yes, in the UK, we have something similar to this happening in the United Kingdom. So the CBN, currently what they are doing is they are trying to align with best practices globally. Nothing has happened so far. They are trying to be preemptive and, to be very, very proactive at this point in time. And I must use this opportunity to say that what they are doing is good for the system. This would, foster confidence in our financial institutions. It will ensure that the systems or the various companies we have are strong enough to fend for themselves instead of depending on the other. And one major thing we must note is that a problem within the group would not be escalated to other sister companies in the group. For instance, if Bank A has a microfinance bank and also a fintech, then a problem in the fintech cannot be escalated to the bank nor to the microfinance bank.
So just give us a bit more explanation here, because we want to understand it. People will be wondering that, oh, I have stocks in this company, it's a HoldCo company and a lot going on there. Which of the HoldCos currently has a lot to reorganize in terms of this framework, and who's going to benefit the most from it?
Okay. It would be wrong for me to start mentioning names, but recently we've seen that a lot of banks have actually diversified, as it were. We've seen most of these banks going into fintech, microfinance, and other related businesses. Yes, and this is all about diversification. For now, as it is, I think majorly is the banks are going to benefit from this. Then the fintechs that depend mostly on their parent company, they will need to, brace up. Maybe they may need time to begin to raise capital because they are going to be on their own now. And if you look at that draft, it's a draft. Is a draft. So yes, so
stakeholders still have to
yes,
give their
so
opinion on it.
Stakeholders, as it were, still have a period of between now to 9th of July to comply. They need to, not to comply, to review the draft and also make comments. Then at the end of the day, CBN would review the comments and take a final decision. Even at that, they may need to give them a transitory period where stakeholders will need to comply with this. So it's enough time for stakeholders. So those that may be negatively affected would need some time to comply. Therefore, investors and yes, for investors is a good one for investors and customers. So investors, you know that, okay, this is who I am investing in, this is what they are doing, this is what they are concentrated at. Then for customers, your data is protected. No one is going to share your data with a sister company. And aside from that, you would also be at a point where you can give a consent. Supposing a sister company wants to share your data with a related company, they would obtain your permission, your consent before doing that. Then on the other side, you would understand, okay, who are you a customer to? For instance, you are under Bank A, but you're not sure whether these services are under Bank A. It may be a service that is being rendered by one of the subsidiaries. So in this case, there's going to be a full disclosure. You will know who you are dealing with per time.
Okay, so we want to get into that. You're going to paint a scenario here because the CBN is also proposing minimum capital requirements for these holdcos now. So as parent companies, they have to have a certain minimum capital that would help to strengthen the companies. So if the parent company has to hold a center about maybe much more than the subsidiaries, how does that compress the return on equities for the, maybe say the banks that are there, and what should investors be worried about this?
Okay, for investors, there's nothing to be worried about here, and I'm not sure that this would impact your return on equity or return on investment as it were, because sometimes a lot of things happen within the group. Sometimes some funds may be used to, help a sister company that is in problem, and in that particular time, you would agree with me that that money is not fully utilized to bring you some returns. So now the HoldCos are going to concentrate in their major business, and this would, in other words, bring more return for the investors. So it's a win-win for the investors, and the HoldCo are going to concentrate on their businesses now and ensure that they derive full utility for the money you've given to them to do business with.
And you just paint this picture clearly. I want the audience to kind of like understand it better, because you said it's a win-win situation. Maybe like, for example, a bank made 100, for every 100 naira, the return on equity is about 20 naira. So now that the holding company has to have more capital, that doesn't mean that they're making more revenue or the profit is increasing. So how is that a win-win for investors? Because they see their return on investment reducing. Is that not the case?
So the return on their investment is not going to reduce in this case, in that, yes, you're going to have more money. They would need to sit back to strategize on more profitable businesses that they should go into. Instead of, tying money in a subsidiary or a related company that is not doing well at that point in time. I don't know whether you understand what I'm trying to say. So now the money shareholders fund is being utilized in a profitable venture. We may end up seeing some of these HoldCo going into, into investments, right? Most of the money may be channeled into investment in securities, fixed income, and so on and so forth. So for this particular time, we believe that instead of the money being wasted or just tied down somewhere, you're able to utilize the money wherein you get more returns for your shareholders.
Dr. Anaba, hold that thought. We'll take a quick break now. Capital Market continues right after. Don't go away. Welcome back. If you're just joining us, you're watching Capital Market Live on Channels Television. We've been talking about the latest regulation proposed by the CBN on banks, ring-fencing and the HoldCos, and the framework that would help to see them become more profitable and stay afloat in this very trying times. Dr. Anaba, you were just explaining to us how the system would work, especially now that the subsidiaries don't have to tie their money down in their HoldCos, and they have to make the money now work for investors. So the translation of what you were just saying before we went on break is that investor return on equity, they're going to make more profit because now the subsidiaries are going to be making more money working for the investors rather than keeping the money for HoldCos. So investors are safe. Thank you so much. But staying on the HoldCos, FCMB is one of the HoldCos that are going to be affected or impacted by these new rules. But we see that during the week they made a very huge appointment. They appointed Mr. Bismarck, economist, very, very foremost economist in Nigeria, Bismarck Rwani, as the chairman. Dr. Anaba, does this signal confidence, or is this a shift now to more a new economic and well-regulated structure for FCMB?
Oh, well, looking at this appointment, one must analyze that this is quite significant and well needed in a period where the global economy is quite uncertain as it is. Bismarck is coming up with over 40 years of experience in research, economic analysis, strategy, and so on. Yes, so he's coming with this wealth of knowledge to the board to enable them navigate the current economic situation globally.
So Bismarck Rwani was not the only appointment we saw this week. We also saw Seplat Energy appointing Tony Elumelu, we know him, the chairman of UBA, as their incoming is going to be their chairman come January next year. But this change in leadership, what does it signal to the market?
Okay. At this point, let me use this opportunity to to say this. A staff of United Capital PLC, and United Capital PLC is a member of the S. Odins group. So I'm here on my own account, and whatever I'm going to say here, yes,
don't worry,
is on my own account. Yes, I have no insider information whatsoever.
Definitely.
And whatever I'm going to say here is based on publicly available information.
Okay, go ahead.
Yes. So
you are safe.
So Elumelu is a strategist, respected globally and domestically, within the domestic economy, and is one that is known with so much prowess when it comes to capital allocation. So about this appointment is now the system, the board are looking at people that will bring in viable contribution to the boardroom, people that would help the system, the various companies to navigate current economic headwinds, both in and out, as in global and domestic.
Fantastic. We look forward to both Mr. Elumelu taking on that leadership role and also Mr. Bismarck Rwani for FCMB. But let's now just look at the latest IMF assessment of Nigeria, which was a bit worrying because we saw them raising concerns over the proposed $5 billion swap deal we have with Abu Dhabi, and also it's saying that the government would be posting a collateral worth about 133% for the loan that's going to transaction. It qualified that transaction as opaque, that it was not transparent enough and it was going to be risky. So what does that say about the risk, the real cost that we are seeing here for this transaction, the risk Nigeria is opening itself to?
Okay, yes, the recent report IMF release recently pointed out some gray areas or some weaknesses within the system, and also made some positive comments about the economy. Then on the flip side is about the 133% collateral requirement that is needed for the $5 billion swap, yes, with an international bank. So with this, the 133% collateral is tied to securities, all right, that would be used as a collateral for this particular loan. So, and the negative part of it is this might trigger some margin costs, especially if the Naira depreciates, all right. So this would impact monetary policy and other stability within the economy. So that is exactly what the IMF is talking about now, that they would want this particular deal to be torchlight currently. So investors and everyone in the economy is looking forward to what the government would do, whether they are going to reverse this or revisit it to, restructure this particular deal at this point in time.
Okay, they also flag the hot money that we get. Instead of, they say we should focus on foreign direct investments and not just the foreign portfolio investments we're getting, you say bonds or equities, because they're hot money, and like you say, hot money does not stay for long. It's quite hot. And I just want to know, how vulnerable is Nigeria's economy if this hot money, the so-called hot money, is reversed and out of the country? How vulnerable does that leave Nigeria as we speak?
Oh, well, if you've been following up with the volume of foreign participation in the equity market, it's quite low, not too high, compared to domestic participation in the equity market. All right. Currently, FPI's foreign inflow in the equity market is less than 20%, as it were, and the rest is domestic investors, which is quite good. But we've seen FPI's foreign portfolio investment in the money market and so on. So in the equity market, the level of vulnerability is not so high. But on the other part of investment, we can see that Nigeria has to quickly do something to ensure that instead of attracting hot money, the FPIs into the system, we are able to, attract foreign direct investment into the system. The major thing about foreign direct investment is that they bring in employment, technology transfer. They would also help people to upscale their skills and so on.
What do you think Nigeria is missing here? Why are we not attracting FDIs as we should?
Yes, it's not as if...
What are we doing wrong?
Okay, it's not as if they are not coming. They are actually coming, but FDIs, before they fully come, they would ensure that policies are very stable, not the type wherein within a few seconds or few minutes, policies are changing very fast. They want a stable environment. And majorly, if you look at the global level, you would ascertain the fact that Nigeria is doing very well in terms of macros. And the IMF actually acknowledged this. You can see our reserves are very strong, currently around $50 billion. You can see the Naira being strengthened recently compared to previous performances. You can also see the equity market year to date around 57.7% compared to what it was last year. In Q1 2026, we recorded about 29% plus as returns in the equity market compared to Q1 2025, where we recorded just 2%, right? So a lot of things are actually having shape. We are seeing these policies crystallizing, and with time, we would attract more of these FDIs into the country.
Okay, so speaking of equities, just give us the outlook for next week and possibly the rest of the month, because you just mentioned, what should we see? We saw a painful week last week. This week, we saw a recovery, though a shortened week. Friday, we saw that relapse, fall back there. But what do you see for equities market? Are we out of the woods yet in terms of the correction? Is it over?
So the outlook for the equity market is positive, though cautious. Currently, investors are becoming very sophisticated. The bandwagon investment type is actually reducing. So we are seeing investors that are tilted to what these companies can offer per time. Yes, their revenues, how they have performed over time.
Looking at the fundamentals.
The fundamentals, that is what we are seeing now. So investors are being more selective now, being more careful, and it is also advisable for every investor to do the same. So for next week, we would see the market being cautiously positive, right, especially when we are getting close to the end of H1, and very soon we would begin to see some of these corporates bringing out their corporate half-year results, their earnings, and those that usually pay interim dividend will begin to declare. So it will be a time where we will see investors positioning. Yes, so that's that. Especially there's an index we call relative strength index, RSI. Yeah, this shows us where the market is at a particular point in time.
Is it quite strong at the moment?
Currently it signals that it is a good time to buy.
Okay, so is there any stock, one or two before I just, because we're running out of time. Is there any stock where investors should be looking at? Sectors?
Yes, for sectors, I would continue to advise that you consider sectors like the industrial sector. Yeah, the telecoms is also good. The banking sector is also very good for you to consider.
Thank you so much, Dr. Sylvester Anaba, Head of Research, United Capital Securities. Appreciate your insights. Many thanks for stopping by.
Thank you. It's my pleasure.
And that's a wrap on this edition of Capital Markets. Remember, whether markets are bullish or bearish, knowledge is always your best investment. Keep watching, keep learning, and keep growing your financial savvy. I'm Will Ibang. Thanks for watching. I'll catch you next week. Bye.